If you're like most people, you've probably seen an ad or received an email promising a way to get rich quickly. But the truth is, these schemes are often nothing more than scams. According to the Federal Trade Commission, Americans lose billions of dollars each year to get rich quick schemes. One notable example is the Bernie Madoff Ponzi scheme, which cost investors over $65 billion. The promise of overnight riches is often too good to be true. So how do these schemes work? Typically, they involve promising unusually high returns with little to no risk. The scheme may claim to be investing in a hot new stock or real estate venture. But in reality, the money is often just being used to pay off earlier investors. This is known as a Ponzi scheme, named after Charles Ponzi, who was convicted of running such a scheme in the 1920s. Another common type of get-rich-quick scheme is the multi-level marketing, or MLM, scam. In this type of scheme, participants are promised high commissions for recruiting new members to join the business. However, the product being sold is often overpriced and of little value. The scheme relies on continuous recruitment to survive and eventually collapses when there are not enough new members to support it. The truth is, getting rich quickly is not a sustainable or reliable way to build wealth. In fact, most wealthy people have built their fortunes over time through hard work, smart investing, and patience. According to Forbes, the average billionaire has spent over 20 years building their business or investment portfolio. So what can you do instead of chasing get-rich-quick schemes? Start by setting clear financial goals, such as saving for retirement or paying off debt. Create a budget and track your expenses to understand where your money is going. Invest in a diversified portfolio of low-cost index funds, which have historically outperformed other types of investments. It's also important to educate yourself about personal finance and investing. Read books, articles, and online forums to learn more about different types of investments and how to avoid common pitfalls. Consider working with a financial advisor who can provide personalized advice and help you create a long-term plan. In addition to investing, it's also important to build multiple streams of income. This can include starting a side business, investing in real estate, or pursuing alternative sources of income such as freelancing or consulting. Having multiple streams of income can help reduce your financial risk and increase your overall wealth. Another key to building wealth is to avoid debt. High-interest debt, such as credit card debt, can be a major obstacle to achieving financial freedom. Pay off your high-interest debt as quickly as possible and avoid taking on new debt in the future. Consider using the debt snowball method, which involves paying off your debts one by one, starting with the smallest balance first. It's also important to have an emergency fund in place. This can help you cover unexpected expenses, such as car repairs or medical bills, without having to go into debt. Aim to save 3-6 months' worth of living expenses in an easily accessible savings account. Finally, it's essential to be patient and disciplined when it comes to building wealth. Avoid getting caught up in get-rich-quick schemes and instead focus on making steady, long-term progress. According to Warren Buffett, one of the most successful investors in history, price is what you pay, but value is what you get. To illustrate the power of long-term investing, consider the example of a person who invests $1,000 per year in a diversified portfolio of stocks and bonds. Assuming an average annual return of 7%, this person can expect to have over $1 million in their portfolio after 30 years. Another important concept to understand is compound interest. This is the idea that your investments can earn interest on top of interest, leading to exponential growth over time. For example, if you invest $1,000 at an interest rate of 5%, you will have $1,050 after 1 year. But if you leave that money invested, you will earn interest on the $1,050, not just the original $1,000. In addition to investing and building wealth, it's also essential to protect your assets from unexpected events. This can include purchasing insurance, such as life insurance or disability insurance, to provide for your loved ones in the event of an emergency. To build wealth over the long term, it's also important to have a clear understanding of your financial goals and values. Consider what is most important to you, whether it's saving for retirement, paying off debt, or building wealth for future generations. Another key concept to understand is the idea of dollar-cost averaging. This is the strategy of investing a fixed amount of money at regular intervals, regardless of the market's performance. By doing so, you can reduce your risk and avoid trying to time the market. To illustrate the importance of patience and discipline, consider the example of a person who starts investing $1,000 per month at age 25. Assuming an average annual return of 7%, this person can expect to have over $1.1 million in their portfolio by age 65. In conclusion, building wealth over the long term requires patience, discipline, and a clear understanding of personal finance and investing concepts. By avoiding get-rich-quick schemes and instead focusing on steady, long-term progress, you can achieve financial freedom and build a secure future for yourself and your loved ones. So what can you do right now to start building wealth? Take the first step by setting clear financial goals, creating a budget, and starting to invest in a diversified portfolio. Consider working with a financial advisor or using online resources to help you get started. Remember, building wealth is a marathon, not a sprint. It takes time, effort, and discipline to achieve financial freedom. But with the right mindset and a clear understanding of personal finance and investing concepts, you can achieve your financial goals and build a secure future for yourself and your loved ones. Finally, stay informed and up to date on personal finance and investing concepts. Continue to educate yourself and seek out new resources and information to help you achieve your financial goals. With patience, discipline, and the right mindset, you can build wealth and achieve financial freedom over the long term.